I want you to imagine for just a moment with me, imagine a lifestyle where you receive checks almost every single month. And those checks you can live off of. You can go on vacation wherever you want. You can live wherever you want. You have true control over your life. And you basically don't even have to do any work for it. It's a beautiful lifestyle, and it is the lifestyle of a Kardashian. No, I'm just kidding. It's the lifestyle of someone that has built up a large dividend portfolio. Someone that has built up a large dividend portfolio can literally do whatever they want, and they just receive money constantly to them, okay? They have a portfolio of stocks that are dividend payers. They receive all this money. They can live off that money. They can do whatever they want. Those are people that have built up large dividend portfolios. So what I want to do for you guys here today is I want to go very in depth on this subject, okay? This is, I'm going to give out a lot of value in today's video, all right? We're going to not only go through all the basics of dividends for anybody that's a little confused or kind of new to the stock market. We're going to go through the mindset of a dividend investor versus a growth investor. We're going to go into the three things you want to look at when you're looking for a dividend stock. And we're going to go into time horizon. So if you want to build up a large dividend portfolio in, let's say, 5 to 10 years, how do you go about doing that versus maybe your time horizon is more toward like a 15 or 20 year time horizon? How do you go about it then, guys? So I'm going to try to give out a ridiculous amount of value today, guys. I really hope you enjoy this video. Hit a thumbs up if you do, guys. And let's get straight into this. By the way, if you own any dividend stocks, you even know what this is, let me know in that comment section. I would love to hear from you guys, all right? By the way, any courses, they're linked down there in the description, all right? So a dividend, if you don't know what a dividend is, it's basically money that's paid out to you as a shareholder, okay? If you own a company that pays out dividends, basically you're going to get paid dividend money from that company, all right? And it's a pretty awesome thing. Generally, this happens every 3 months, all right? That's generally what most companies pay. So if it's a company that pays a consistent dividend, they're generally speaking going to do it every 3 months. Some companies choose to do special dividends, which is like a once a year type thing. Some choose to pay, twice a year or something like that. But most companies out there, most dividend paying companies, they pay out every 3 months, okay? And not all of them pay out at the same time. So literally, if you own enough dividend stocks, you could receive money every single month, if not multiple times a month, from your dividend paying stocks right into your brokerage account. It's a beautiful, beautiful thing. And with that money, you can do whatever you want with it. You can buy more of that same stock. You can buy a different stock that's a dividend payer. You can just live off that money and pull it out of your brokerage account and put it into your regular bank account. Like, you can do whatever you want once you receive that dividend money. That's up to you, okay? Now, do all companies pay dividends? No, okay? Not all companies pay dividends. Most of the big established companies do. If you look at the Dow 30, which is like the 30 biggest companies in the United States of America for the most part, you're going to see, the majority of them pay dividends. And a lot of the stocks that are in the S&P 500, they're going to end up paying dividends of some kind. Some pay really big dividends, some pay really small dividends. It depends on the stock. But no, all companies do not pay dividends. It's just once you get up to a certain stage of maturity in that company, and maybe your growth isn't quite as much, generally speaking, most companies start paying a dividend. Even Apple, for instance, pays a dividend. That's a company that didn't pay a dividend for a long, long time. And just a few years ago, they started actually even paying out a dividend, okay? It's just kind of like a next step in the process of becoming a mature company, all right? Now, how are they taxed? They're generally taxed at a 15% tax rate, which is generally speaking much lower than the average person. The average person probably pays an 18, 20, maybe 25, maybe 30% tax rate on their normal income. However, any dividend money you receive in, you're going to be taxed at around a 15% rate. So it's generally speaking much less than what an average person out there actually pays for taxes, all right? And the last question for the, kind of the newer people to dividends is how do you find dividend stocks? You can just go through like the S&P 500. You can go through lists. You can Google it, dividend stocks in the S&P 500. You'll see lists there. You can actually go on like something like Yahoo Finance, and you can just type in ticker symbols. Like, let's say you want to look in Coca-Cola. Type in Coca-Cola into Yahoo Finance, and you can go to the dividend yield. You can see, if they pay a dividend, what that dividend is they pay, the dividend yield, which is actually the percent of money you're basically going to get based upon that current dividend, all right? And all those type of things. Like any pretty much financial website out there, you're going to see a dividend if that company does pay a dividend. If it doesn't, doesn't, it's just going to say a 0 there, all right? And that basically covers the majority of the basics around dividends. And one last thing I'll say to you guys is, just because a company pays a dividend currently or has in the past, it does not guarantee that company will pay out in the future, all right? Now, there's some things you can look into that will kind of make you feel more comfortable that a company will continue to pay out a dividend in the future, but it's not guaranteed forever that, oh, if they paid $2 last year, they'll pay $2 this year. But generally speaking, most big companies that are well established, have good management teams, good products, good services, they're going to actually up that dividend every single year, and you'll actually receive more and more as you hold that stock for a longer and longer period of time. Like people that bought some like say Coca-Cola back in the 80s or Coca-Cola back in the 70s, like the dividend rate they're getting now is ridiculous for them. If you were to buy Coca-Cola stock now, it might seem like, oh, maybe I only get a 3% yield or something like that, so I only make 3% of my money, from dividends a year. But people that were buying back in the 70s and 80s, it's a ridiculous yield, all right? So that kind of covers the basics. Now I want to get into the mindset of a dividend investor versus a growth investor, and then we'll kind of get into the 3 things to look for, and last we'll get into, 5 to 10 year horizon, what do you do? And a 15 to 20 year horizon, what do you do? Alrighty guys, now I want to get into the mindset of a dividend investor versus someone like a growth investor, because they are very, very different mindsets, okay? So if you're a growth investor, your main goal over everything else is that those shares increase in price, all right? So you buy stock ABC, and let's say you buy those shares for $10 a share. Your main goal is that hopefully that increases to $12 a share, $15 a share, $20 a share, and you can sell out, make a big profit, and then you can go ahead and invest that money into the next growth stock and try to get another big gain, okay? That's really the mentality of a growth investor. Where it differs is a dividend investor, their goal is to receive money in dividend payments, every month or every 3 months and whatnot, and then go ahead and reinvest that money into that same stock to pay out even more dividends, so they own even more shares in that stock, or to another dividend stock where they can build up even more and get more dividends, okay? And more dividends compounds, and you get more and more dividends, and you get more and more shares, and it just kind of builds upon itself, okay? Now, a dividend investor, would they like their shares to increase over time? Yes, okay? That's, everybody wants their shares to increase over time. That's pretty much in the stock market from a long perspective, but that's not the main goal. The main goal is that they receive those dividend payments. They probably hold those stocks for 5, 10, maybe 20 years, maybe for life, and they just hopefully those dividends keep getting bigger and bigger and bigger and bigger. Think about a Johnson & Johnson, a Procter & Gamble. If you bought into those stocks decades ago, the dividends were very minuscule compared to what they pay now, and now those dividends are absolutely massive if you had invested back 20 years ago or 30 years ago or something like that. And so you could have been making all that dividend money over the last 2-3 decades and just reinvesting that into the same company, Procter & Gamble, Johnson & Johnson, or whatever company you want, or other companies, okay? So it's a very, very different mentality. And a growth investor is willing to take on more risk because they're really trying to go after and they're really trying to get that stock that really just kills it, okay? And they can make a great gain. So they're willing to take a little more risk. Whereas a dividend investor, they're investing in, I would say, a little bit more boring companies, okay? Dividend paying companies are generally speaking a little bit more boring. You're not going to get a lot of dividend stocks that increase, 50%, 100%, 200% in a year. It's just kind of unrealistic. You will get some growth stocks like that. However, it's also pretty unrealistic that if a company is very well established, they've been paying out a dividend for a long time, it's very rare that I'll see a stock go down 40, 50% in, let's say, 6 or 12 month span. Growth stocks, it happens to them all the time. Like I see growth stocks all the time that will, kind of be going up, and next thing you know, it goes down 40, 50% in a matter of a month or a few months time, okay? So it's a very, very different mindset around it. Now I want to get into 3 things that you have to look for if you're looking for a dividend stock, and then we'll get into the last part, 5 to 10 year horizon versus 15 to 20 year horizon, and how do you approach that? Alrighty guys, now in this section, I want to go into the 3 things that you really want to look for in a dividend paying stock, all right? 3 these are like the 3 most important things in my personal opinion when you're looking at a dividend stock, someone that's paying a dividend, okay? The first thing is, it has to do with the net income trend. And if you're buying a stock to pay out a dividend, you're planning on holding the stock for 5, 10, 20 years, maybe for life because you just want to collect dividends for a long time to come in the future. If you're looking for a stock like that, you really want a stock that the net income trend for, like, let's say the last 10 years is pretty consistently going up. You do not want a company that is fluctuating all over the place when you are buying a dividend stock. You want a company that's generally every year they just get a little more profitable than the last year. Every year they just kind of take another step up and another step up. And if they do ever have a slight, misstep where maybe profitability goes down one year, net income's down a little bit, they just pop back up and they take it to another level. You want consistency. You look at the income statement, you see in that income statement, look at the last 5 years, look at the last 10 years, what is the trend for net income? You want a staircase up into the right, okay? That's what you want. You want that net income to continue to increase and increase and increase. Because if you don't have a company that has a good net income trend and that company gets less profitable each and every year, guess what's going to end up happening? Those dividends are going to have to get cut at some point in time, or they'll have to stop paying them altogether because the company's profitability goes down and down and down. And if they're making less and less money, that's less and less money that can be paid out to you as a shareholder, or build the business up into doing other things. So if you're buying a dividend stock, you got to really look at that net income trend and see where that's going. Because if it's going the wrong way, it's probably not a good dividend stock. Okay. Sometimes you can get in some growth stocks that maybe the net income falls off for a year or two, and then it pops back up because they have some big growth vector going for them. But when it comes to dividend investing, net income trend, you want consistency, and you want it to continue to get better and better over time. The second part is payout ratio. What payout ratio means? It means how much of that net income is the company actually paying out in form of dividends, all right? So let's say the company makes $1 billion of net income. If the company pays out $100 million in dividends, that means it has a 10% payout ratio. When I'm looking at dividend paying companies, I want to try to find dividend paying companies, if that's what my goal is. I'm going to try to find ones that have low payout ratios, preferably under a 50% payout ratio. If best case scenario, under 25%. The reason being is that means that company has a lot of room to go as far as moving up that dividend over the coming years, all right? If a company's already maxed out, let's say they're paying an 80% payout ratio or 90% payout ratio, that company doesn't have much more room unless they increase profitability dramatically. They don't have much more room to up those dividends. They're just kind of like already maxed out. So I'm looking at payout ratio, and I'm really wanting stocks that have a 50% payout ratio or less, okay? That's once again something you can find on most financial websites. Yahoo Finance, if you can just calculate it. Look at what their net income is. Look at how much they pay out in dividends per year, and you can just do the calculation yourself. It's a very simple ratio there. And like I said, you just divide out, you just take the net income, divide that out by how much they're actually paying out to shareholders in the form of dividends each year, all right? And the third part is I want to look at debts. Debts is something that I think is really, really important if you're a dividend. It is an important thing regardless of what type of investor you are. But debts, if you look at that balance sheet and a company is loaded on debts and they don't have much for cash and investments, this sets them up for two things, okay, in a poor way. This one sets them up for, if they have a ton of debts and very little cash or investments on that balance sheet, then the company is at jeopardy of basically having to pay out all their money in interest payments and things like that, which makes they don't have much cash flow at that point in time to actually pay out to you as a shareholder. If a company's actually loaded up on debts, even if that company is actually profitable, if they have all these massive debt payments to make all the time, what is left over for you as a shareholder at the end of the day? So that's something you want to pay attention to first off. And the second part is, if the company comes upon hard times because just something happened out there, a big lawsuit happened, a new competitive threat came in their space, or maybe a big recession happened, the company got hurt. If they're loaded up on debt, and that company stops making as much net income, all of a sudden what ends up happening is your dividend payment all of a sudden gets cut in half or gets cut completely, okay? And you have no more dividends to get from that company at that particular time. And that's no fun, okay? So when you're looking at a stock, make sure you're looking at that, or a dividend stock, make sure you're also looking at that balance sheet, seeing what type of debt load that company has versus what type of net income that company has and versus what type of cash and investments that company has. You want to kind of balance all those out. A company that's super heavy on debts and has very little cash and investments around is a company that's setting itself up for failure and to have to cut that dividend or just slash it completely and just say, oh, we don't pay out dividend anymore because we need that money to pay off debts or try to expand the business or something, okay? So those are three very, very vital things that you want to look at if you're trying to look into a dividend stock. Now let's get into the final part, the most important part. You trying to build a 5 to 10 year portfolio or a 15 to 20 year, massive large large dividend portfolio, what do you do? Alrighty guys, now let's get into this last section, which is really around what type of strategy do you want to do as far as the time horizon goes. Do you want to try to kill it in a 5 to 10 year span with dividend stocks, or are you looking a little further out and you're trying to build this over the next 15 to 20 years, all right? Now, I kind of grouped this upon age brackets, all right? So I think, a 15 to 20 year horizon is probably more realistic for the folks that are watching this between the ages of 18 and 39. If you're between those ages, let me know in that comment section. And the 5 to 10 year horizon is probably something that a lot of people 40 plus are going to want to try to do, because you're a little older, and if you haven't built much yet as far as a dividend portfolio, you're really going to try to accelerate that in a very fast amount of time. Especially if you're 50 plus, you're really trying to do it in a much shorter time, okay? So let's go through the 18 to 39 time horizon first, all right? So 15 to 20 years is kind of what you're looking at. So imagine you're 20 years old, you're imagining like when you're 35, 40 years old, what type of large dividend portfolio have you been, built out? So there are a couple keys I would look for here. The one is, obviously with both these portfolios, you want to invest only in stocks that currently pay a dividend. But with the longer time horizon, I would focus more on potential big dividend payers, meaning it might be a stock that already pays a dividend, but they have a very low payout ratio compared to what they basically pay out. They could up that dividend a lot. So a stock that comes to mind when I think of a company that's going to pay massively more in dividends, or at least I envision it, in 5 to 10 years from now, than they do today, would be Apple. Apple right now pays out a teeny payout ratio compared to what they could actually pay out based upon current net income. Never mind where that net income is going to go over the next 5 to 10 years. So what I'm looking for is a dividend paying company. If you got a longer term horizon, look for ones not only that pay dividend, but are ones that have a great chance to up that dividend considerably over the future years, okay? And also you want to diversify, maybe in 10 to 15 type, dividend stocks out there, hold something around 10 to 15, so you're more well diversified, because you're not trying to kill it tomorrow, so you can diversify more, and that's fine, all right? And the goal is to invest around $500 a month or more, it depends on your situation, but $500 a month into dividend stocks, all right? So if you want to break that down, that's around $125 a week, somewhere around there is the goal for you to put into your stock market account and buy more dividend stocks, all right? I think that's very possible for a lot of people out there can achieve that. And if you're not achieving that yet because you're super young, I think you have a great chance over the next couple of years to have an opportunity to do something like $500 plus a month into your dividend account. That ends up equating to around $6,000 a year in basically dividend stocks you're buying. Then you get paid out all those dividends, and hopefully over time as you get a better job or start a business or do something like that, you have more and more money to funnel in. And on top of that, your dividends are just compounding and getting bigger and bigger. And generally those companies you bought in the past are paying out even bigger dividends. And so you really get that snowball going, okay? So all of a sudden in 15 to 20 years, you're in that group of the people that says, I can do whatever I want. I receive all this dividend money every month, and man, I can just live wherever I want, go on vacation wherever I want. I don't have to do anything, worry about anything. My life's just taken care of financially. That's a beautiful thing, okay? So that's definitely something you can do there if you've got a more of a 15 to 20 year horizon. If you're 40 plus and you're kind of getting up there in age, you haven't built much yet, there are some ways you can go about this. So you want to look for more current large payers. So for you, it's not necessarily so important to find ones that might, increase a lot of their payments over the next 5 to 10 years. You want to find stocks that are already paying out a lot of money, that already have maybe a 5% dividend yield, a 6% dividend yield. Some of the big pharmaceutical names, some of the big companies like that pay out massive dividends, pretty much every single quarter. Those are the type of companies you're looking for, because you're trying to do it in a much shorter amount of time. You're really accelerating things. So while this person might be focused more on stocks that pay a 1 to 3% yield, but have a great opportunity to build that over time, you might be focused more on stocks that pay a 4 to 6% yield. Now, I'm going to caution you, there are some stocks that pay a 7% yield, 10% yield, 12% yield. Some of those stocks are very sketchy, okay? If you look at their balance sheets and their net income, it's really, weird type of stocks, okay? So generally, I would just, if you see a stock that pays a 7% plus yield, just have bells going off in your head like there's something probably wrong with that stock. I'm just gonna say that. There are very few stocks I've ever seen that were legit companies that were really doing things well and weren't doing some weird accounting things or something that had a 7% plus yield, okay? So I'll just caution you on that. So you're looking for those large payers, and you're gonna probably be in more like 5 of your best paying companies. You're going to try to not be quite as diversified. They're probably looking for 10 to 15. You're trying to really kill it because you're pushing this time horizon to a 5 to 10 year horizon. So you're really going to want your money in like your 5 best dividend paying companies out there, all right? And you're looking to try to deposit $1,000+ per month. You're older, so hopefully you're you know, generally speaking, most people make the most money they ever will from 40 to 60. So hopefully you have at least $1,000 left over each month plus to invest, and you can get that built in a very fast amount of time. If you're doing $1,000 a month, that's $12,000 a year. If you're doing $2,000 a month, then we're talking $24,000 a year, and you can see in a 5 to 10 year horizon with stocks paying a 4, 5, 6% yield, and you're depositing between 12 and let's say 24,000 a year into that, you can get a large dividend account built in a very short amount of time. And all of a sudden 10 years down the road, you're like, I built something really big. And it depends on your risk. It depends on, you know, what strategy you want to do. You don't have to do this strategy if you're 40 plus. You can stick to this strategy if that's something you want to do. It just depends for you guys out there. And also if you're younger, you could do this strategy as well. It's up to you guys. So I hope this video gave you guys a lot of value around dividends and kind of building up a large dividend portfolio. I try to give out as much value as I could in this video. Hit a thumbs up if you enjoyed. Make sure you follow me on Instagram if you love keeping up with stock market news. Thank you for watching and have a great day.